The NEO Inc. stock price gained 0.74% on the last trading day, Thursday, December 31st, 2020, rising from $48.38 to $48.74 and has gained 4 days in a row. It will be exciting to see whether it manages to continue gaining or take a minor break for the next few days. Today, we'll check out the NEO stock's price prediction report. Number 5. Signals and forecasts. As of January 2021, current price of NEO stock is $48.740, and our data indicates that the asset price has been staggering for the past 1 year, or since its inception. NEO Inc. China has been showing a declining tendency, so we believe that similar market segments were mildly popular in the given time frame. Future price of the stock is predicted at 90.093115, that's 84.844%, after a year, according to our prediction system. This means that if you invested $100 now, your current investment may be worth $184.844 on Tuesday, January 4th, 2022. This means that this stock is suited as a new addition to your portfolio, as trading bullish markets is always a lot easier. The NEO Inc. stock holds buy signals from both short and long-term moving averages, giving a positive forecast for the stock. But the stock has a general sell signal from the relation between the two signals, where the long-term advantage is above the short-term advantage. On corrections down, there will be some support from lines at $46.81 and $46.89. A breakdown below any of these levels will issue sell signals. Furthermore, there is a buy signal from the 3 months moving average convergence divergence MACD. Volume is rising along with the price. This is considered to be a good technical signal. Number 4. Support, risk, and stop loss. NEO Inc. finds support from accumulating volume at $48.30, and this level may hold a buying opportunity as an upward reaction can be expected when the support is being tested. During the last day, the stock moved $2.73 between high and low, or 5.71%. For the last week, the stock has had a daily average validity of 6.47%. Our recommended stop loss, $46.17, a negative 5.28%. This stock has medium daily movements, and this gives medium risk. Number 3. NEO follows Tesla, goes there goes. There is simply no question that the price of NEO stock has followed that of Tesla. NEO and a number of other Chinese EV companies are trying to catch up to Tesla by raising capital. But Tesla's cars still have what the Financial Times calls unwavering popularity in China. The newspaper published a chart showing that the American company's EVs far outsell those of the local Chinese automakers. Among the companies in the latter category are NEO, XPeng, New York Stock Exchange, XPEV, Li Auto, NASDAQ, LI, and WM Motor. Each of these companies, except WM Motor, recently raised capital in U.S. public markets in an effort to compete with Tesla. For example, XPeng's IPO on the New York Stock Exchange raised $1.5 billion at the end of August. Li Auto had its IPO on NASDAQ at the end of July and raised $1.1 billion. WM Motor recently raised $1.47 billion in a Series D round on September 21st. They all want to catch up with Tesla, and some have tried to find EV market niches in China, but Tesla still dominates in China. According to the Financial Times, Tesla sold 45,721 vehicles in the first half of the year, and the Model 3 in China's most popular electric car. NEO's founder, William Li, told the Financial Times that the firm's recent cash flow problems, which seemed to be behind it, were a test of maximum pressure. According to J.D. Power, NIO's vehicles have given their owners on average fewer problems than any other EVs available in China, including, by a small margin, Tesla's vehicles. On the positive side, Top Gear was very upbeat on the vehicle's powertrain, acceleration, and interior. It concluded that the NIO ES6 is a good car and shows a lot of promise for NIO's future. But it added that the vehicle is not quite there yet, and in many respects, it's on par with competition from Europe. Number 2. History of NIO. Founded in 2019, Shanghai-headquartered NIO is a pioneer in China's electric vehicle (EV) market. Often touted as the Tesla of China, NIO went public on the New York Stock Exchange in 2018. NIO's unique selling proposition is to provide EVs at competitive prices. Importantly, NIO does not really manufacture its own cars. It contracts state-owned JAC Motors, headquartered in eastern China's Anhui province, to make vehicles. In turn, JAC charges a fee for every car. In 2016, NIO introduced its first model, EP9, which is an electric-powered two-seat sports car. In 2017, the firm launched its first volume-manufactured electric vehicle, the seven-seater SUV ES8, whose deliveries commenced in 2018. The company's second volume-manufactured EV, the ES6, a five-seater, high-performance premium electric SUV, was launched in 2018. Last year, the company launched its third volume-manufactured electric vehicle, the EC6. The vehicle will offer long-range driving capabilities of more than 380 miles on a single recharge. During the year ended December 2019, NIO's revenues came in at $1,123.9. Full-year deliveries of the ES8 and ES6 were 20,565 vehicles. NIO is a rising player in the industry and is currently riding the EV wave. Its prospects are closely associated with the increasing adoption of electrification in China's auto industry. State backing, coupled with strategic partnership with Mobileye and BAS, Battery as a Service, offering are expected to be key growth drivers. However, NIO will face a tough competition ahead as the race for EV supremacy will only get fiercer in the coming years. Number 1. Is NIO Inc. stock a buy? With NIO, New York Stock Exchange, NIO, growing quickly and launching promising innovations involving batteries, I believe that the company could become highly successful. But given the huge valuation of NIO stock, I would wait for a meaningful pullback of the shares before buying them. As many others have noted, NIO's orders have been increasing rapidly. In the third quarter, its sales rose 154% year-over-year to 12,206, and in September, its deliveries jumped 133% YOY to 4,708. As of September 30th, it had delivered over 26,000 vehicles this year. Meanwhile, I'm very impressed with the company's battery programs. According to a Seek Alpha columnist, NIO has successfully deployed battery swapping technology and is one of few EV companies that has done so. The technology could eventually allow recharging EVs to become as fast and convenient as refueling conventional automotives are now, the author indicated. And in a related initiative, NIO has launched a Battery as Service, or BaaS, program. Under BaaS, the financial terms of purchasing an EV from NIO are very similar to those of buying a gasoline-powered vehicle. Specifically, the price of NIO's vehicles dropped by $10,000 and consumers pay $145 per month for the battery. NIO Limited was in 35 hedge funds portfolios at the end of the third quarter of 2020. The all-time high for this statistic is 30. This means the bullish number of hedge fund positions in this stock currently sits at an all-time high. There were 30 hedge funds in our database with NIO positions at the end of the second quarter. Due to some small weaknesses in the technical picture, we have downgraded our analysis conclusion for this stock since the last evaluation from a strong buy candidate to a buy candidate. I'd use the shares decline as a buying opportunity. Pullbacks in the week of stock sales are usually temporary. Another Investor Place columnist, Luke Lango, thinks the shares can reach $150 over the next decade. That's a very reasonable assumption. And under that very reasonable assumption, I see NEO stock driving to $150 over the next decade, he wrote. Do let us know in the comments, would you buy this stock or not? Please subscribe to the Stock Advisor. Thanks for watching.